welcome and thank you all to all of you for agreeing to represent your continent. What we want to talk about today is general market condition, what you're seeing, and maybe we'll start with that, and I'll start with Christina on the European side.
I've been talking to some of our colleagues and seeing what are they seeing about the market. And well, the thing is that it's pretty much the same depending on it's pretty much the same around the continent. And so there are some lines that are more tough, and I guess that's going to be the same, like property or commercial auto and medical.
Lisa, what's North America up to?
I think a lot is the same. We actually were talking prior to the panel discussion, and the property market is really what's killing so many of the companies. And so looking for ways to mitigate that risk, taking on higher deductibles, looking at layered programs. Reinsurance is actually becoming tougher to get as well. Medical is always an issue in the United States. We're also seeing some issues with workers' compensation with the legalization of cannabis and medical marijuana. It's causing some additional issues for both workers' compensation and employment practices liability. So, there are some areas where you can leverage some of your programs that are having less issues with rate to try and get a combined approach and have an insurer take on the combined risk in a more appropriate way to lower premiums.
So similar trends, it seems like. Pete, what's Australia up to?
I think Australia's generally starting to stabilise. I think we've probably had 4 or 5 years of rate increases, and particularly on the property and casualty lines. And I think we're now hoping to see a bit of stabilisation, and insurers are coming out of what they call remediation, and they're coming back into the market, but in a much more controlled way and very specific appetites. So it's whereas we might have had a couple of insurers that we would favour, we've now got to be a lot more expansive in our thinking, because insurers that used to do a lot of different occupations are now very specific in what they want to do. So it's stabilising possibly, but becoming a bit harder in terms of you need to know your markets.
Thank you for that update. Gautam, the rest of APAC.
Well, APAC, a lot of action happening down there. I think there's changes every week, every month that's happening. I was just speaking to someone yesterday that, I think APAC is, evolving and growing at an accelerating pace, whether it's in terms of its product offerings, whether it's in terms of, what the market requires, and, so on and so forth. I think this is largely happening because there's a lot of investments that are coming into Asia Pacific. There's a lot of investments coming into Asia Pacific from Europe, from America. This could be because of geopolitical issues. This could be because of companies expanding and going further, and really because the consumer and business buying power in Asia Pacific has grown really, really significantly, especially post-COVID. And I think there's just a greater demand for that. And frankly speaking, the market in Asia Pacific, when it comes to receptivity about insurance, is becoming more and more mature. North America, Europe were probably much more receptive to the idea of insurance products, and their utility much before us. I think post-COVID, it already started pre-COVID, but post-COVID it just accelerated even more. And I think the market is much more receptive. They see the importance of insurance, but that also means that a lot of the insurers in the market have to recalibrate their strategies, because now they are strongly seeing, and they are more effectively seeing, the loss ratios, the trajectories, and they are reconsidering their underwriting positions. And I think this is also evident with the fact that if I just speak about, let's say, Singapore, where I'm based, in the last 10 months, just in this year alone, we've seen, I think, 8 to 10 new Lloyd's syndicates or insurers set up in Singapore or increase their offerings. For example, MSIG never did financial lines in Singapore and Hong Kong, but from this year, or rather last year, June onwards, they decided to go into that space as well. And that's really, a lot that's happening in the market down there. And in fact, I was just speaking to Neil about this yesterday. That's probably a reason also why that the M&A activity in Asia Pacific between insurers and brokers has sort of slowed down, because those who are still there in the market, even though they were considering M&A in the past, selling, and they were up for acquisition, they feel that, okay, now they're in the right place at the right time, and maybe they should capitalize of this catalyst juncture that they are in the insurance economy and industry.
Thank you very much.
Just to add on to that, though, Olga, so we talked a lot about the property and casualty side, and I briefly mentioned, as did Christina, the medical side of things. In the US, that is one of the largest concerns for employers. We're talking about 2024 projecting somewhere between probably 5.5% and 8.5% medical trend. You're talking about somewhere along the lines of $31,000 US to insure a family of 4. So these costs are just astronomical. The advent of gene therapies, all of those things are adding to the pressures on employers for controlling costs along a broad spectrum. And I think we're going to continue to see that issue rising more and more to the top, thinking about more of a total risk management approach and not just thinking about the property and casualty side, because the costs of the employee benefits side are just skyrocketing, and there's no end in sight. No end in sight because of all of the new gene therapies coming out, no end in sight because of the advent of more weight loss medications, no end in sight with mental health issues. So the need to really think about how you structure an employee benefits program in the United States has to be top of mind for employers.
And we'll talk a little bit later on today about the phenomenon of ERM and how much more popular it has gotten because of the legislation that's upcoming in various parts of the world as well. Gabriel, Latin and South America, how are we looking?
Well, basically, yesterday we had a panel as well from Asia Pacific, and basically everything that they mentioned kind of resonates to what we are seeing today. We have to recognize 2 things. One is the claims. I mean, during the last 2 decades, we have been seeing the increase in claims, CatNat claims in general. What I read is that we have been seeing increases of 5 to 7% on a yearly basis since the 1990s to today. So that seems that that won't stop. In terms of the property market, we have seen in Mexico that it's kind of with these slight increases. We're not seeing the increases that we saw in the last few years, increases in around 5 to 10%. Of course, it varies on the type of industries that we are insuring. If we are talking about textile or plastic or other high-risk industries, it will be a different story. We don't find capacity. There's a lot of restrictions in the underwriting. But again, in the general terms, it's very stable at the moment. But it will continue that way. And we have to separate kind of property. And when we're talking about cargo insurance, that's a different story. I'm not talking basically for all the region, but at least in Mexico, we had a history of challenges in that area in terms of the accidents that are happening in the roads. But now, in the last couple of years, we have been seeing an increase of losses related to thefts on the roads. So that, if we were talking about transit insurance, we can see increases of 25 to 30%. That's in the cargo, but again, that's one part. If we are talking about heavy-duty trucks, the market is really small. There used to be 5 carriers that were only doing truck insurance, and now there are only 3. And sometimes some clients are getting increases due to their claims experience of 100%. So we have to break that up. Of course, EV is the same story. The inflation we are seeing an inflation at the middle of August, probably 4%, the basic inflation 4.6%, and we're expecting that the medical inflation will be 18%. So that's where, I mean, that's how it's developing in general. Yeah.
Really, really great updates and insights. So with the launch of the Client Advisory Council at WBN earlier this year, it's really wonderful to see clients from 5 continents that are on that council and getting their insights of what their needs are, whether from the EB or PNC perspective, and how similar we all may be. So I wanted to hear from you guys. Are you seeing trends from clients? Are they wanting different things? Are you engaging in a different way? Maybe Lisa, I'll start with you. I know a little plug for Highland with the award-winning year yet again for the captive solutions. But are you seeing a different ask from the clients?
Yeah, I would tell you that the need for data is huge. So the ability, and again, whether it's on the property and casualty side or on the employee benefits side, the need to have data, have their data, be able to look into that data to really understand trends in their business. So we actually just did a global risk management advisory panel of our own clients and prospective clients, and that was the #1 thing we heard. Benchmarking is good, but benchmarking is really only as good as what you're trying to benchmark against. So it's really about real-time data, analyzing that data, trying to figure out what are the trends for your business, what are the things that are, and predictive modeling within that. So it's one thing to have past data, but it's what you can do with it going forward. We've talked about during this conference artificial intelligence and how that will help both with efficiencies within our business, but also how it will help us with data mining. I think those are the tools that our clients are really, really looking for. On the employee benefits side, I would tell you it's communication and engagement. The millions and millions of dollars that employers are spending on providing employee benefits that are no longer resonating with a multi-generational workforce. So this ability to create flexible benefits on the employee benefits side, we're seeing more and more of that. And then this integration with the silent resignation, with all of this change and in the workforce, we're starting to see issues with training and development. So workers' compensation, how do you make sure that you can maintain a safety of culture, or culture of safety, backwards? How do you maintain a culture of safety when you've got such significant turnover within your population? And then how do you continue to pass that knowledge on, because your older population may be coming toward retirement, and now there's a whole new generation that doesn't have that institutional knowledge. So there are things that I think we've got to be thinking about for our clients in a very different way. They're asking for our support when we talk about the trends going on in the market, property costs being through the roof, our need to make sure that we're doing quality submissions, that we are getting the client involved in the underwriting process in a way that they've probably never even really wanted to be, but making sure that they're telling their story around safety, their story around employee health, well-being, all of those things. That's what I think we're hearing a lot from the market, but data is king. And if we can't figure out how to grasp and harness that data and use it to help our clients make better decisions, risk management decisions, employee well-being decisions, I think we're going to continue to have market issues.
Gautam, on the APAC side, is it a similar story? Are you seeing something different?
Yeah, to a certain extent, it's similar. So of course, like what Lisa said, data is king. Clients want to see a lot of data. Another thing that there is quite a bit of requirement for clients now is sort of a, regional coordination, where they would like to, deal with, perhaps one broker for multiple lines of business or for multiple regions, and that we've seen that coming up again and again. And even from the client side as well, we see more consolidation where, there's a single point of contact handling multiple regions, and they would like to actually have, conditions which are the same for all their different regions. Third thing is definitely technology. I think with the whole manpower crunch and the war for talent that's taking place in all the different markets, clients are looking to move towards technology, whether it's, for your employee benefits, census movement, for your employee benefits and PNC claims management, or even for your, document management and etc. So that's why, for those who have spoken to Neil, the owner of Pacific Prime, he's constantly pushing on technology, because that's that's something that we've seen has, come up to be really, really important on all spectrums of business and lines of business, where clients are more and more requiring that. I think, and like what I mentioned earlier, the market in Asia Pacific is fast evolving, is fast maturing. So what clients also really, really want to see is multiple quotations. In the past, the reason was purely and primarily premium, but now it's really because of a comparison between what the different insurers are offering, right? For example, difference in definitions, difference in list of exclusions and extensions. And we see that happening more and more on the property casualty side, on the financial line side, because that's really a strong, catastrophic risk management tool when it comes to, businesses. And especially in the current juncture of the economy, where people are worried about, the looming recession, people are worried about errors and omissions, people are worried about cyber attacks, and. So that's something which clients have become very, very increasingly savvy about. Lisa mentioned about the work injury compensation earlier. We're seeing that more and more, including from broker partners, risk management services, risk engineering services. For example, we take care of the largest workers' comp policy in Singapore, here at Pacific Prime. We see that more and more clients, including that client that we have, constantly asking us for risk engineering services, right? We have to send people down to the client's premises, where are the risks coming from, how can you reduce the claims, and etc. So there's a lot of things happening there. Employee benefit side, a lot of EAP, a lot of wellness, that clients are looking at. And I think now the governments in some of our regions have also started playing an important part in trying to make this happen, both on the property casualty side as well as the employee benefit side. For example, in Singapore, right, the government has introduced what we call the TWSH program, the Total Work Safety and Health Program, okay, which is subsidized by the government if you meet certain criteria. And maybe one last thing I would add as an example is, for example, in China, right, in some regions like India, for example, covering parents under your employee benefit plans was, pretty much the norm as far as I can remember. But now we are seeing that accelerating in China as well. And maybe, the way we look at it it's probably, primarily because of the aging population scenario caused by the one-child policy in China for many, many years, right? So and employers and clients are requesting for those things more and more. So yes, I think overall there is that whole evolutionary aspect, which is just making clients ask for more and in many different ways, but at the same or cheaper premiums. So, which is where the tough part is.
Christina, what are European clients needing?
Well, we're seeing that data is very important nowadays. What we're seeing also is that insurers, they are requiring a bit more information, and they are digging more into the everything of the risks. So it's not only on the property side that they're doing big risk assessments before going for bigger risks. It's also on the casualty side. They really need to understand the business. There's so much uncertainty nowadays that they really go and ask many more questions than it was before. So what they want to know more is what the client's doing, and they are asking, and they even are taking more data from general sources to subscribe the risk. One of the things that we're also seeing is in cybersecurity. They go through all the systems of the clients, and you really have to bring all the experts, because what they see is that they are asking for a lot of information, and a lot of information about all the technology they're using, how are they, how vulnerable the systems are. So what we see is that now the insurers want to have more data from the clients, and that's being a little bit, making the process a little bit longer than it used to be. And then they are very much choosing on what risk to have or what not. So the data is very important, so that the clients can really get a good pricing, because the more explanation you give, the more risk assessment and clarification. That's how we are seeing it, and to make it a little different. And also the clients are asking for more and more about. They want to have everything more included, embedded in the same system, and that's how we are seeing now.
Pete, what about the Australian clients?
I think the majority of Australian clients are are still the way they've always been: understand my business and tell me what I need. And I think the economy at the moment is fairly stable, so I think people are just wanting to concentrate on their business. But having said that, there's a category, an emerging category, a growing category of clients who are now understanding that, you know, how do we stop these increases? How do we improve our risk? So the risk maturity of our clients is starting to improve, and they're starting to be more open to, okay, well, what sort of risk surveys can I do from a workers' compensation perspective? How do I make my workplace safer? The legislation has strengthened quite considerably in terms of if you have a serious accident or a death on site. So there's particularly at board level, there's a much greater degree of focus on are we actually doing the right thing by our employees? And so I think there's an emerging category of clients who are now wanting to be much more risk aware. And I think, you know, I don't think we're in a soft market or a hard market. What we've been saying to clients is we're in a risk market. We need to present your risk better. And so it's quite encouraging in some respects, because you know, we've been telling these clients for 10 years they should do more, and now they're more open to it. But you know, they're probably paying 40 or 50% more for their premiums, so that's got their attention.
Great opportunity.
Yeah.
For those that pay attention to the client. Gabriel.
Yes. Also, again, if we see the commercial lines from one part, the risk management type clients, when we are involved in tenders, an important part of the tender is the IT solutions that you are able to provide. So, and it's basically, I mean, due to the fact that they are looking for solutions that can help them manage the data and the information in a better way, to be more efficient in the operation that they are having and to have better information to take decisions. The market is also providing APIs solution and being more active with the brokers as well, to try to integrate and to provide a better solution to the client together. In terms of the EB side of the business, what we are being asked each time and more, it's about preventive programs. I mean, we call it in Mexico minor medical expenses, which is basically consultation and first contact consultation and discounts on pharmacies for medical, for drugs, and discounts on labs for the exams in general. So, and in general, the companies and what is happening in Mexico, it's something that we heard also yesterday, how the environment in the world is changing, how the companies from Asia are moving to different locations or relocating their business. And Mexico, it's one of the markets that we have been benefit some kind of way of that relocation, but that has brought also a war for talent. So it's I mean, they have to find new benefits, I mean, to retain that talent in some kind of way. So one is that we are seeing more the inclusion of coverage that we didn't have in the past in Mexico related to mental health as well, and also flexible benefits. It's something that we have been talking for years, but not necessarily. I mean, it's something it's happening completely in Mexico, but it's something that everybody asks about it. So companies, I mean, in general, they're asking for solutions to complement the benefits, but not necessarily they are paying for them.
Well, most of you mentioned, go ahead, Gautam.
Yeah. And I think what is really interesting is with what everybody has said, I think what you would actually realize, a common theme or a common thing that's happening, is that actually now the onus is more on us brokers to be providing that value proposition rather than the insurers, right? The brokers are having to step up more than the insurers. And, I think that places greater responsibility on us. We are having to move away more and more from the traditional role of a broker to that of a risk manager, to that of a health manager, to that of an outsourced HR arm of clients, to that of an outsourced finance or procurement arm of a client than we ever had to before, right? There's more onus on us to really provide that assurance while the insurers just provide the insurance.
I think you're spot on. And I was listening as well. I mean, so many common themes. And our clients, whether it's the risk management department or the HR department, they are strapped. And they're also realizing that their employees are no longer all sitting in one facility in one location as they may have been. And so that onus back to us as broker partners, the insurance procurement is such a small element, an important element, but helping those organizations, because their departments as well are disparate. So our need to make sure we're coordinating not only across our community of partners here within WBN for our clients, but also helping them coordinate within their own organization. And I think that role of dot connector, quite frankly, has become as much our role. We're broking more than insurance at this point. We're trying to create that collaboration that they have been just as siloed as sometimes the insurance agency has been. So risk management sits over there, and then you've got treasury or finance sitting over here, and you've got your health and well-being, your HR arm sitting over here, and then somewhere workers' comp kind of falls in over here. And by the way, cyber, it's your employee risk. That's your greatest risk from a cyber standpoint, but cyber's happening over here at risk management or CFO level, and what you're doing to train employees and help them to make better decisions when it comes to using technology sits over with HR and training and development. So this concept of hearing that there are common themes irrespective of where you are in the world, but our role becomes critical in helping them see beyond maybe the narrow view that they have within their company, because many of them want to have that view. They want to take that on. That's what we're hearing. And it's just the bandwidth, the stretch is there on them to provide what they're doing in their day-to-day job and then try to think more broadly. There's only so many hours in a day for them. So our role does continue to evolve. And I think we also have to push the insurance marketplace, that those carriers, to really understand the voice of the client as well. I think they've been a little insulated from that. And I think as brokers, it's our responsibility, because we do continue to take on more, to actually leverage that and push back to make sure that they are in line with what the clients are asking for, what the employees are asking for.
Well, I'm glad you're saying what I've been thinking, and I'm asked about quite often is, will the very, very fast advancements of technology replace the broker? And how soon will that happen? So it's really good to hear the value proposition. We like to talk about the fact that we have 89 countries in the room today, and that cultural intelligence that we bring into the process, the emotional intelligence that we bring into the process is something that, at least at this point, the robots can't do. So it's really good to hear these themes and the evolution of our broker role.